Hi, and welcome to episode 14 of the Aussie Tech Crypto Show, a show about cryptocurrency from an Australian viewpoint. This show is brought to you by Australia Coin, Australia's true blue Aussie crypto coin. I'm your host, Jason Oakley, and this is my co-host, Will Tomkinson. Hey, Will.
Good evening.
How's you been the last couple of weeks, actually?
Well, yeah, it's been a while, hasn't it? We have had a couple of weeks off. Well,
Somebody
probably a
had a
good
holiday.
thing. Because, I was going to say, you were away the week before, so it was probably going to be a boring show. And I was crook last week, so, no. But, no, it's been all right. It's all plodding along, and Australia Coin is making headway in certain areas, and it's all happening.
And there's so much green. This is our
first show where everything is actually,
environmentally friendly. It's all green.
So, all those dollar bills.
dollar bills, y'all.
I need to apologise in advance for the coughing and spluttering and strange noises that we're probably both going to make. We're both slightly not healthy at the moment, so.
Yeah, so for some Bitcoin started heading back up. I guess the whales have had their fun and got it down low enough for everybody to invest tons of money in so that it'll start going back up again, which a lot of people are very happy about. I was hoping to get into the blockbid.io beta for their the new Australian exchange in Melbourne, but I missed out. So I would have even thrown some fiat in, which I've been holding off on for quite a while, but we'll have to see what happens now.
Yes, it's... Well, I mean, it obviously tells the interest that's sort of surrounding that sort of thing when you can't even pay to get it anymore.
Yeah. I was also, while I was down in Melbourne on my holiday there, it's a meetup for Horizon State and a couple of other crypto-type people in Melbourne, which I was tempted to go to. And then I had a really bad day, so I didn't end up making it. I think it was $25 entry fee, which is not too bad, and would have been interesting to meet Jamie Skeller and talk about Horizon State, because that was one of the cryptos I invested in originally, but it was only available on Cryptopia, and I really don't like their interface, and so I liquidated that and sent it back over to Binance and invested in some other stuff. But I was hoping Blockbid was one I could get into, because I talked to Jamie on Twitter, and he said that Horizon State was going to be on Blockbid. I don't know, during the beta. I know they're only going to have maybe half a dozen to a dozen coins in the beta, but they're going to expand into other ones, so it might not even be in the beta. But I was just hoping to get in and get some investing going now while everything's just starting to head up again.
And we talked about Blockbid last show or show before, but basically, if you're not sure, it's effectively something we've been talking about for a while. It's hoping to be a single point exchange, so you don't have to bounce through exchanges to change from coin to coin.
Yeah, so they are hoping to hold a lot more altcoins than just about every other exchange in existence at the moment, which would be good because you'd be able to trade fiat straight to that. Whereas you go to somewhere like Binance, you have to put your money. So what I've been doing, you probably heard on the show, I put my money into BTC markets, then I convert it into Ether, then I transfer it across to Ether, through the Ether to Binance, and then convert it again. And you've got the fees for putting it there, the fees for converting, the fees to transfer, the fees to convert again, and you lose bits of money along the way. But one good thing that I saw that may be happening with Binance, if we've interpreted what CZ, the CEO, has tweeted about, he said that he said, I've heard something about our team putting together a broom. And what everyone believes this is referring to is to clean up all the dust, which is tiny fractions of crypto coins that are left over when you're trading, because when you convert from one to another, it always leaves little bits. And I've got bits of Verge and bits of poet and bits of this and bits of that, tiny little bits all sprinkle out through my account. And just want to take all those little bits, jam them together and put it into a coin that you like. And it's possible that that's what they've just done.
By the way, too, if you're interested, that Binance, if you're sort of into that sort of thing, is currently hiring. They're looking for developers. So there you go. They're looking for. I wonder
if that's going to be in their new location that we talked about last episode.
Yeah, well, it wouldn't surprise me. They've just got big. They've also, I noticed on their page, got a big ad up now for Binance Vietnam.
Yeah.
But the I was going to say, yeah, the whole thing about cleaning up the crumbs effectively. Anybody remember a movie called Hackers? And remember this worm that went through all the accounts and took like the 4th and 5th digits off the end of the account because you couldn't do anything with them anyway?
They did the same in Office Space. They tried to do that, but he got the decimal point wrong and ended up with like was it $300,000 in one day or something instead of tiny fraction percents that were being rounded off.
Yeah, they probably noticed that.
Yeah. It was like, "Oh, you're a genius, man." He said, "Yeah, I think this was the main plotline of Superman 3 or something."
Oh dear. Good. So
each week we hope to bring you interesting information and news about the crypto world and what it's all about.
Well, we just did that, so does that mean we're finished?
Hope you enjoyed the show. Don't forget to like, subscribe, comment.
All right.
It's a blipvert. You ever watch Max Headroom, the TV series?
Oh, yes. Love
They
that.
had blipverts where they try and compress an advert into a fraction of a second and people ended up exploding because they... That's awesome. Max Headroom. Kraken is closing in Japan. Coinbase acquired Earn.com. Iran bans crypto. Yeah, that's going to work.
Yeah, clearly.
MT Gok CEO is now the CTO of VPN private internet access, so watch out if you...
Remind me not to use that.
That's why I posted it on the Aussie Tech Heads page. And he's... we'll talk about it later, but the Japanese are still almost 100% going to chuck him in jail any second now. And our coin of the week is going to be Ripple, just so Glenn's got something to be happy about. Because Ripple's actually going up, Glenn. Let me check it. Hang on. What's the current value of Ripple?
Don't check it in case it hasn't. As of last time we checked, it was going up.
Let me load up my Delta app.
It's funny. The whole...
plus 37.6%, Glenn. Plus 37.6%.
That's actually a reasonable...
It's now worth 92 cents Australia, where it went down to like 30 and it was really good.
I was going to say, it's actually gone threefold in the last week. It's done pretty well.
They've had some good stories, and we've got something about Ripple as well.
Mm.
We get a little bit of explanation about what it is and how it's being used.
Thing that the water does when it's...
Yeah. When you spit in it.
I was going to say when you skip a rock, but you know.
Whatever. Oh, yeah, that's what I meant. Let's start with some crypto news.
Why? Alrighty, so crypto exchange Kraken. I just love that. It's just Kraken. Release the Kraken. What's Kraken? Good looking? Wait, that's different.
Thank you.
Will end its services in Japan, according to an email statement. Kraken, which has been operating in Japan since October 2014, said this in the statement that its decision to shut down services in the country is based on the rising costs of doing business there. The crypto exchange is currently ranked number 10 on the top crypto exchanges by 24 trading volume on CoinMarketCap, with around 188 million. I'm assuming that's supposed to be MLN in trades on the day to press time. Who does that as millions? Seriously. According to the exchange's statement, Kraken will close trading in Japan around the end of June 2018. Japan's Financial Services Agency, or the FSA, began on-site inspections of the country's 15 as of yet unregistered crypto exchanges earlier this year. Well, I don't know why I'm putting my hands on the WASD key. It's not like I'm...
We're not Minecrafting. This is not enough. We already said that to
I'll tell you. After Japanese crypto exchange Coincheck was hacked and lost around 534 million, again, MLN, in NEM. That was reportedly stored on a hot wallet. As a result of these inspections, FSA issued business improvement notices to a total of 8 exchanges and temporarily suspended operations at 3 more. 2 Bitcoin exchanges in Japan chose to shut down instead of work with regulators for compliance. And crypto exchange Binance, ranked number 1 on CoinMarket for 24-hour volume, decided to open an office in Malta after receiving a notice from the FSA for not being registered. So
there you go. Japan is trying to crack down, and everyone's like, okay, we'll just leave Japan and go somewhere that's welcoming. Thank you. Bye, Japan, who's just now lost a whole heap of really cool investment opportunities. And businesses.
And I kind of, I mean, okay, I get they're cracking down on unregistered exchanges.
Down. Good one, cracking.
Did you like that? I understand that, you know, and non-legitimate ones, and not like they're ones that are potentially shady. Okay, fine, not a problem. I agree completely. But don't pick on someone like Binance. Like they may not have been particularly registered for trading in your country per se, but it's not like they're a fly-by-night operation.
They're not BitGrail. We'll put it that way, Mr. T. They're not BitGrail.
Yeah, well.
And I'm not bitter about BitGrail.
Oh, it's your own fault. No wonder, blame it yourself. And this is what we keep trying to get through to people. At the end of the day, if you lose money on crypto, guess what? You put it there in the first place.
Scream into the void, son.
Yep, that's it. But yeah, so it's kind of weird. I don't understand really what they're trying to achieve. I mean, although we did a story a couple of weeks ago, I believe it was Japan, that was trying to start their own centralized sort of crypto. So maybe that's why. Maybe they want it to be predominant. I don't really know. Yet the irony is, and we'll talk about this later, there's countries kicking it out. China was another one, and yet China is responsible for more Bitcoin mining than any other country in the world. Right. So, yeah.
Isn't it ironic?
Well, what's the real world implication of this? Okay, I get in theory the exchanges aren't no longer operating on Japanese servers, but for a Japanese investor in crypto, is there really any difference? Like, does it really matter? Do they care that the exchange isn't local? Like, is it going to make any difference?
It's got to be good for the economy having it on your soil, though. Otherwise, why is Malta like, oh my God, come here, it'll be brilliant, we'll be best friends?
Yeah, but Malta's got slightly less free money than Japan does.
Could be
but,
that.
I mean, yeah, it's not going to hurt your economy, certainly. Whether it's a boost to your economy in terms of whether it's, I mean, it's a few thousand jobs, but when you're talking a population of however many million, is it really relevant? I don't know if... I don't understand what this FSA, the Financial Service Agency, I've actually looked into this earlier in the week when I saw this story come up. I don't really understand what they're trying to achieve. Like, they've said we want to crack down on non-registered exchanges. Well, okay, I get that, but they don't give you the option, like in the case of Binance, they didn't say, hey, you're not registered with us. We want you to be here. We just want to make sure you're legit. Can you send us some business details and we'll register? They basically go, you're not registered with us. You need to leave.
Yeah.
It's like, hang on. That's the opposite of being productive. I just don't understand it. I don't understand it from a business point of view. I don't understand it from an economical point of view. And I don't understand it from a time management point of view, because surely, at the end of the day, it doesn't freaking matter.
Well, the only thing that maybe it's the banks who are nudging the governments and saying, these cryptos, they're giving us a bit of a hard time. People are not putting so much money in the banks. They're putting this crypto thing. Could you guys just nudge them out of the country or something?
Well, does Japan have a centralized bank?
Now you're getting technical.
I'm just looking it up because I'm curious. If they do, then that's quite possibly it. I mean, they have Bank of Japan. It's the Central Bank of Japan. Yeah, so they actually do have functions and operations of the bank. Okay, Bank of Japan is responsible for the mint. Yeah, okay, so they do have one corporation-controlled bank, that explains that.
So you can be the thing. You can be we're a bank and we don't like the crypto thing, get rid of it, or you could be like the other countries that are like, oh, maybe we should get into this crypto stuff, even though we are a bank, because this could be good for us as well as our customers who want to invest, as well as businesses and companies who want to invest with crypto because it's the big thing. They could go that way, but instead they're like, no, let's get rid of them.
Japan's dependence on the central bank is to drive economic policy toward... what? That doesn't make sense. Oh, okay, yeah, they've shorthanded it for the thing. But basically they're saying... Japan's basically released a statement saying that they're pushing people to be more dependent on the central bank.
There you go.
So, and they're undermining... Ironically, they're going against the wishes of the governor and undermining his political authority. So, okay. So apparently the government doesn't want it to happen like that, but the banks are trying to drive the crypto out. That's interesting. So, okay, so the banks aren't controlled by the government. I wonder who controls Japanese banks. It wouldn't be anybody we talked about last show, would it?
We can't say for sure.
We could probably almost say for sure. Even without doing any research, we could probably nearly be pretty right. So that looks like that's what it is. So it looks like the central bank, who is, let's say, loosely associated with several world superpowers. Looks like that's what they're trying to do. They're trying to force crypto out and create a dependence.
Even though those superpowers are heavily investing in crypto.
Exactly. I know, right? They've got their memo for this before they started doing that. That's what it was. So, yeah, that's interesting.
We didn't say it was going to make sense. We just said we'd report on it.
It's also interesting that they're so open about it. I guess that's the Japanese mentality. Hey, we're going to come and destroy you, but we're going to give you a couple of months warning. You see you guys in the back? Yeah, we're coming for you. We're going to go through these guys first, and then we'll be over there. Like, that's just the way the Japanese work, I think. They're like... Okay,
we'll just go this way. Bye!
So, yes. But anyway, that's something to keep an eye on and see what ends up happening there.
Coinbase has acquired Earn.com, a social network that helps people earn and spend Bitcoin, and has hired the startup CEO, Balaj Srinivasan, as its first ever chief technology officer. Coinbase and Earn.com, formerly known as 21.co until rebranding late last year, did not disclose the terms of the deal. The price tag was private funded, however, to be in the ballpark of $100 million, around the same amount 21.co raised during its last private funding round in 2015, according to recent reports by CoinDesk, a cryptocurrency blog, and Axios media startup. Everyone is aligning behind Coinbase as the winner of the blockchain in the US, Srinivasan told Fortune. He pointed to a string of Coinbase's top-level hires as evidence of the trend. Siv Hariji, formerly of Hewlett-Packard, and TD Ameritrade as Chief Operations Officer. LinkedIn's Emily Choi as the Vice President of Corporate and Business Development. Twitter's Tina Bhatnagar as the Vice President of Operations and Technology. And Facebook's Rachel Horwitz as Vice President of Communications, to name a few. As you've seen and continue to see, it has become a magnetic node, Srinivasan said of his new employer. A lot of people are coming here. Srinivasan's number one priority in his new role as tech chief will be add more stars to Coinbase's ranks by recruiting top engineers, he said. His other priorities will include evangelizing cryptocurrency and blockchain technology, as well as helping to set an internal tech strategy, which includes integrating and expanding Earn.com beyond its present incarnation as a paid email service. Coinbase and Earn.com are both backed by Andreessen Horowitz, a Silicon Valley venture capital firm where Srinivasan continues to serve as a board partner. Srinivasan stepped down from his role as general partner at the VC firm in 2015 when he left to work full-time on his startup, then known as 21.co, and focused on Bitcoin mining. In a few short years, 21.co raised more money than just about any other Bitcoin startup at the time. The company eventually pivoted away from hardware, changed its name to Earn, and built a social network around cryptocurrency. Wow, that's interesting.
Sorry, I was just looking up that Axios thing. The media startup, apparently.
Mm-hmm.
From what I can tell, they literally take like Twitter feeds and flesh them out. It's like they've taken, like, the first story is about a tweet that Donald... Okay, here's their homepage. So the first one is Axios' own tweet that they just tweeted. Mm-hmm. And then just before that, it's a tweet from Mike Allen. And then one from Sarah Fisher. So one's political. The Mike Allen one's on I don't even know what they're trying to do, but this doesn't make any sense. Then the next one's about IBM getting into blockchain, which is like a 2-week-old story now. And then... Yeah, I don't know. That's really weird. But anyway, I know it's not part of the story, but I was just like, this is the strangest webs. I don't understand what they're trying to do. There's nothing that makes sense. It doesn't flow. There's no way. I don't understand.
Maybe it's kind of like Medium or something.
I don't know. I'll have to have a look at it later, see if we can figure it out. But this... Earn.com, which it is now, it's basically one of those glorified pyramid schemes, effectively, when you look at it. It basically says you earn Bitcoin by replying to emails and completing tasks. You keep the money or donate it to charity. So, yeah, you literally, some secretary is getting overloaded with emails, so they send you a buttload of them and you just reply to them. It's a... what's that? Is it a Fiverr.com or whatever it is?
Yeah.
You pay someone $5 and they go and do something for you.
Oh, yeah.
Same sort of deal, except it's using Bitcoin.
Axios has got a manifesto on their site.
Ooh.
All of us left cool, safe jobs to start a new company with this shared belief. Media is broken and too often a scam. Stories are too long or too boring. Websites are a maddening mess. Readers and advertisers alike are too often afterthoughts. They get duped by headlines that don't deliver and distracted by pop-up nonsense or unworthy clicks. Many now make money selling fake headlines, fake controversies, and even fake news. Can you imagine Ford being obsessed mainly with whether the engineers love the howl and design of the F-150 engine instead of simply delivering an awesome truck people want to drive? Never! But that's what digital media companies too often do. They produce journalism the way journalists want to produce it, and they design their products to maximize short-term buzz or revenue, not deliver the best experience possible. We are engineering Axios around a simple proposition: deliver the cleanest, smartest, most efficient and trustworthy experience for readers and advertisers alike. How about that?
That's as confusing as their webpage.
Our guiding principles include reader first, elegant efficiency, smart always, don't sell BS, smart brevity, excellence always.
So they don't want clickbait headlines, right?
Right.
LinkedIn CEO warns of tech's unintended consequences. LinkedIn CEO Jeff Weiner, visiting Washington as part of Silicon Valley's new alternative to DC, told Axios that tech companies still need to do more to deal with unintended consequences.
LinkedIn CEO, there's no cheap trick to fix fake news.
Yeah, that's it. There's no cheap... And then it's like a 4-minute video with 3 ads in it. LinkedIn CEO Jeff Weiner tells Axios that arguably the most important way LinkedIn stays ahead of the fake news platform is to be manual curation and the role of editors. Well, yeah. That's what I don't get. They're going against their own... How Facebook makes tough calls on censorship. Facebook has published the internal guidelines used to make tough decisions on sensitive topics. Am I missing something, or are you doing the thing you said you're not going to do?
Well.
Anywho, I know that's not the story, but man, I'm confused by the whole thing. So, in the long run, was it worth Coinbase buying Earn? No. I kind of get what they're doing. As I said, like it's like that $5 or that dollar a day or whatever it is. You pay someone to do something for you. In this case, you're being paid Bitcoin or a particular currency to do something. Is it sustainable? Well, I don't know. I guess it's going to be another one of those things where being the market's so volatile, you might get offered a tenth of Bitcoin one day to do something and it's worth it, and the next day you get offered half as much because the job's already done, but Bitcoin's worth half as much as it was. So, I don't know. It'll be interesting to see what happens. I mean, don't get me wrong, I'm all for crypto-based services. I think it's a great idea, whether it's businesses supporting crypto for payments or, whatever the case is. I just don't necessarily think... I don't know, we'll see. I hope it works out for them, but just looking at what they've currently got what they're currently offering and trying to do a Google search to see if anybody's actually doing it, nothing comes up to see if anybody's participating in this, and they've been operating for, since 2015 apparently. Yeah. So, are they just living off their funding? Like, what are they doing? I don't know. But anyway, if it works out, great. It'll be fantastic, and it's a service probably that'll never come to Australia because Australia's like that. But I would certainly, if I had needed something done and I had the crypto to pay for it, I'd much prefer to do that. It's just so much easier. So, we'll see.
Why not?
An Iranian newspaper. It sounds like they've got like 37 different newspapers. Says the country's central bank, here we go again, has officially banned the use of cryptocurrencies in financial transactions in order to prevent crimes such as money laundering and terrorism. Hang on, isn't that exactly the same wording that, who was it a couple of weeks ago? Was it South Africa? No. Who it was a couple of weeks ago. They banned it, and I'm going to go back through the show notes. I'm sure they had exactly the same wording. The move is seen as part of
the money and laundering and terrorism that normal banks fund.
Yeah.
But they don't want crypto to do that. They like cornered a market or something. They're like, hey, you guys, you can't do that. We've been doing that for the last 100 years.
Yeah, that's it. They want the paper trail apparently. So the move is seen as part of the efforts to control the currency market after the Ryle hit an all-time low earlier this month. Monday reports of the Donya E. Equested Daily says that ban applies to all monetary and financial centres of the country. Blah, 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 including banks, financial institutions, currency exchange services. Okay. Tough, though cryptocurrencies such as Bitcoin have never been authorised in Iran, they are available in parallel markets. Cryptocurrencies are created and exchanged independent of banks and governments. Transactions are typically anonymous, but the currency can be converted into cash when deposited into accounts. Okay, so this is what it's about. So you can trade whatever you want, you're just going to be stuck with it because it's not possible to trade it and convert it and deposit it directly into your bank through BPay or something, apparently. I guess
if your bank is with them, there's nothing stopping you getting a bank account that's not in that country, is there?
Or even a BPay, PayPal account.
Yeah.
And just load it into your PayPal account and then go and cash that out. Like, hello? But I just find it funny that they specifically are saying, we don't mind the general population doing it. We just don't want our bankers or financial institutions or currency exchanges to offer a service. Which is fine because they have nothing to do with it in the first place.
Right.
Like, So we don't want services involved in crypto that have nothing to do with crypto. Okay.
There you go.
I'm happy with that. But once again, it's the central bank doing what central banks do. We determined that the only thing worth money in this country is pig's ears, so the only thing you can buy is pig's ears. Anything else is worth nothing.
Well, they're good at making pig's ears of everything, aren't they?
Yeah, that's it. That's pretty much what it comes down to. It's the central banks are just... It's the whole thing where... Remember... It'd have to be 10 years ago, where there was a massive upheaval between, like, you had MasterCard, you had Visa, you had American Express, and you had diners. Like, they were, like, Amex was your top of the range, like you had your platinums and your blacks and your golds. Then you had your diners for people who weren't quite on an Amex budget. Then you had your Visa for the jet setters, and then MasterCard was like the business card where if you owned a business, you'd have a MasterCard. And then Visa went, you know what? I reckon we can give everybody one of these. And the rest of the cards just went nut at them. They just went, no, you can't do it. We don't want to know about it. And so after Visa started rolling it out, and they had prepaid cards, and they had preloaded cards, and they had the gift cards, and then they had the normal bank cards that initially you had to actually apply to get a credit rating with, even though it was your own money. And then they went, hang on, that's stupid, let's drop that. And anyway, after 50% of the population had that, MasterCard went, hey, we can do it too. Oh, wait, there's no banks left. So Westpac went, hey, we'll take you. That's fine. No one else came to us. But, yeah, because Westpac used MasterCard as their debit card. But anyway, it's the same sort of deal. Like the banks are like, we're the only thing you can use. There's nothing else out there that can do the same job as us. And they're like, well, actually, there's these few things here. Well, okay, fine. You're just not allowed to use them then.
There you go. Problem solved.
Yeah, that'll fix it. Yeah, so yeah, it's a speed bump, I guess. It's once again, it's one of those dictatorship rulings that is going to have zero impact in reality, because the only people who are going to miss out is the government, because they're not going to get the interest that they would have got had people put that money into their account. So
that's it.
Whatever. So I know how much you love. I know how much you love this next story and how much you're invested in it. So I'll let you take that one.
Thanks. Former MT Gox CEO Mark Karpelès may still be on trial for embezzlement in Japan, but that isn't stopping him from playing an actual role in the cryptocurrency world. As part of an interview with Fortune, the one-time Bitcoin exchange leader has confirmed that he's now the CTO for London Trust Media, a company best known for its popular VPN service, Private Internet Access. There's also an investor in cryptocurrency services like Block Explorer, Purse.io, and Zcash, but Karpelès insists he's not involved in that side of the business. London Trust Media co-founder Andrew Lee said he is happy to give a second chance to Karpelès in his critical hour. So even criminals get a second chance. Isn't that wonderful? What a world we live in. The stint may be short-lived. As Fortune notes, Japan's conviction rate is over 99%. Short of a surprise, there's a real chance he'll be serving a prison sentence and possibly facing other restrictions on what he can do. He's presently out on bail and isn't allowed to leave Japan. Japanese police arrested Karpelès in 2015 on claims he had artificially inflated the balance of a personal account by playing fast and loose with transaction records Mt. Gox used to convert bitcoins into dollars. He would falsely state that he had transferred $1 million into the account, for example. He's always protested his innocence and isn't responsible for the theft of the 650,000 coins that contributed to Mt. Gox's downfall. I nearly said it. But it's doubtful that prosecutors will see things his way. Moreover, there's an additional quirk. You see, Mt. Gox's bankruptcy claimants are limited by Japanese to the values as of the exchange's collapse in 2014. Thanks to Bitcoin's surging price, it's theoretically possible to revive the company. There's a petition in progress and send billions of dollars to Karpelès. This sounds good on the surface, but Karpelès would face both a 60% tax and an inevitable string of lawsuits. Short of recovering all the Bitcoins to fend off those creditors, even his best case scenario looks fairly grim.
Yes. It's, you picked on one of the worst countries to be in at the time.
Right. There are a lot of other countries that would have been a lot better.
Yeah, Japanese don't take... By the time you've gone to trial, they've exhausted every other avenue. They don't send people to trial unless they know they're going to be convicted.
Yep.
Yeah, so good luck with that. Let us know how it goes. But they're right. I mean, that's the interesting part about it. At 2014 prices, it was only, 650,000 coins that in 2014 were, $10 a coin or something? So it wasn't that much of fiscal value in real world. But if those 650,000 coins get paid out at the 2014 amount, and then, but the question is, do they pay out the 650,000 coins, or do they pay out the that in the
those
dollar
coins
value?
are supposed to be gone, aren't they?
Well, they're supposed. Well, no, he's supposed to have them.
Oh, that's the ones he's got.
Yeah, Capellas or whatever is supposed to have lost them, and MT Gox is supposed to have them. And that's what
okay. It says here.
I think
he's responsible for the theft of 650,000 coins.
Yeah. Oh yeah, that's right. He doesn't have it. Somebody has it. Yeah, but that's the thing. But MT Gox is suing him for those 650,000 coins. The question is it 650,000 coins in monetary value or in coins? Because if that's a whole, that's a whole lot of difference. If that's 650,000 bitcoins, that's an insane amount of value now.
If you had 20 bitcoins, it was $200 then. Now it's $20,000.
Yeah, so it was $10 a coin instead of $10,000 a coin. 10,000 a coin, yeah. So that's move the decimal place. So that's move it 2 places that way, 3 places that way, 4 places that way. So that's like 6.5 billion or something.
Nice, right? If you got it.
Yeah, well, that's the problem. Who's got it? But this is the part where you find out that Capellas has actually just got it in another account somewhere, and suddenly he's not actually broke.
Well, that's the thing with the bitcoins, though, is they're fully traceable. That's why they're trying to bring out a lot more privacy coins now, like Monero and stuff.
I mean,
they're
traceable, but they're only.
You don't know who's got them.
Yeah, that's right. You can trace where the coin is, but you can't trace who's got it. And if the coin is in an offline,
a close look on that wallet.
Yeah, and if it's an offline wallet, it doesn't. If it's an offline wallet, you'll never find it until it gets transferred. But even then, you're not going to know who owns it. You might find out who it eventually gets transferred to, but that means nothing.
Yeah, they would have to be very careful, though. You're not going to take out 10,000 bitcoins out of one of the wallets people are watching, and then suddenly this account over here just deposited 10,000 bitcoins and then transferred fiat and took it out. They would get transferred into a bank account, and you'd be like, "Well, now we've got to trace."
That's it, especially if it's a offshore account.
So it's an interesting situation that people have got the coins; they're in somebody's account. For some reason, you can't get them back out of there, probably because you need the keys. But the people who've got it can't do jack with it. So you took down MT Gox. Well done. But you can't do nothing with the coins that you got now.
With them.
Can you?
Is it really so different to, a lot of the heist movies where they grab $10 million in marked gold bars? I mean, what do you do with them? Every dealer in the world knows about them. And okay, sure, there's the black market, but you've got to work your way in. And then once you're there, you've got to gain the trust of people. So for at least for the next 10 years, you can't do anything with them. Yep. It's exactly the same as with this. Like, I'm sure somebody will figure out a way to transfer them offline so they don't become.
They'll have to do it somehow.
Yeah, that or it'll be on the dark web or something where it won't be traceable in normal terms anyway. Because
set up some shell companies.
Well, the thing is, it's still considered part of the pool, so there's still 650,000 coins that are part of the pool that are. Well, actually, can you, if you know the coins, you know the wallet they're in, and you know they're traceable to coins, can the coins be cancelled if you know what blockchain? Because back when these were created, there couldn't be that many coins compared to what there is now.
It's an interesting technical question.
I wonder if you can cancel a group of coins.
You can burn coins.
But you need to have access to them to do that, though, don't you? That's not done from. That's done from the physical coin and not from the back end. I don't know. I don't know enough about the way the blockchain technology works that side of it. I don't know. I know it's a group of randomly generated numbers that create the coin, but I don't know if that randomly group of generated numbers is the coin, and if it is, can that be reverse engineered and have that coin deleted? You wouldn't think so, because you would think that would make it too easy for people to actually be able to play the currency market then. You just go and delete $10 million in coins, and suddenly you're sitting on a heap of them.
Yep.
I don't actually know, but interesting.
Interesting to think about.
Well, for somebody, I'm sure there's somebody out there who'll think about it for a while. I didn't put that much thought into it. I mean, I'm not that interested in it.
But now we got it in your head.
That's it. It's like when I say an elephant, what's the first thing you think of?
Chickens.
Exactly. Wait, what?
Huh?
Haven't you seen Inception? Don't you know how this works?
Elephant and the chicken.
Yeah, that's that world famous joke that everybody knows. I don't even need to repeat it because everyone knows it.
Everyone knows the punch. Oh, it's hilarious.
That's
the
great.
punchline.
Yeah, that's it. Yeah. Isn't that the Monty Python funniest joke in the world?
Yeah.
You can't even be in the same room, man, is it?
Yeah.
I often have that after I have curries. Same thing. You can't be in the same room as me.
Exactly. It's not recommended.
Anyway.
Speaking of
blockchains, a co-founder and a former CTO of LinkedIn, recently launched. Oh, seriously? Okay, I'm going to explain this for you guys who are.
This is his name up the top.
Yeah, I know. For those who are listening and not watching, at the start of the podcast, we had audio issues, so I have to feed my audio back into my headset so I can record it, and there's like a quarter of a second delay. So I'm hearing myself speak a quarter of a second after I'm speaking, and it's really throwing me out of whack.
You said you can handle it.
I normally can handle it, and I used to do it all the time, but I haven't done it for like 12 months. I haven't had to. And now I've forgotten how hard it actually is. I tried that, then I can't hear you. When I'm talking, it's okay, but when you're talking, I can't do it.
You don't want to listen to me anyway. I've got nothing interesting to say.
This is true. Dude. Yeah, Eric Lai is on a mission. A co-founder and former CTO of LinkedIn, Lai recently launched Hub, Human Trust Protocol, to help strangers safely interact on the internet and build a digital reputations based on their transaction history. Today, Hub has announced ICO Hub, a proof of concept reputation system for ICOs. What does ICO Hub do? It allows investors and interested parties to verify the teams conducting ICOs, which in turn helps identify which projects offer legitimacy and quality. That's important. While blockchain technology projects an undoubtedly exciting and potentially disruptive to every industry and business, ICOs and token generation events have been rife with scams and bad actions. Just this month, the cryptocurrency world was rocked by an alleged $658 million fraud. That's how you write million, people. In Vietnam, one of which has sparked demonstrations and protests, because that's going to help get your money back. Every new incident erodes trust of the entire ecosystem, and while it would be wrong to suggest the majority of ICOs are dishonest, investors and partners are concerned and are looking for ways to reduce risk. It's called risk reduction management. That's a thing. While there are some solid guidelines available to help avoid scams, too many still slip through the cracks. Yeah, it's that 80-year-old person who clicks the email. That's what does it. The ICO Hub project actually I shouldn't say 80, I know some of them are like 40 and still do it. The ICO Hub seeks to represent reputations not only of individuals but also entities. Like told me, the reputation of an entity might come from an individual but also past business dealings the entity has had, such as past finances, partnerships and customers, that would increase their trust score. ICO Hub will rely on a web of trust from multiple data sources and determine trust scores. So it's like LinkedIn for crypto.
Yeah.
Pretty much.
Sounds interesting.
Yeah.
And people get reputation, so you could vote up whether they're trustworthy, and if someone has ripped you off, you can vote them down, maybe. Kind of like Reddit. It's Reddit for ICOs. You can give them an upvote or vote them down. Yeah. Don't like them.
LinkedIn's the same, but it's like a real-world credit check. On our program we have at work, when we enter a customer's details, it runs a credit check and it tells us straight up if it's a high risk or low risk or whatever. It's basically that on a digital scale. It basically says, I guess it's like a combination of LinkedIn and eBay. You get your business links that say whether or not it's good or bad, and then you get your customers links that say whether or not it's good or bad. So it's probably, I mean, it's a good idea, don't get me wrong. I think it's great. The only thing is, it's, again, one of those systems that needs to be partnered with every other system because they've all got to talk to each other. This system by itself is all fine and dandy, but you're not going to have somebody specifically go to this system just to look something up. You know, like it has to be integrated in the exchange I'm already looking at. But yeah, it's a great idea. So
yeah, there's too many ICOs all over the place. You don't really know which one to go with. People have been burned, losing thousands or tens of thousands or maybe even more money. And they find out that it was just a big scam that someone put together to get a bunch of money and then do a run-up.
I mean, it kind of isn't going to stop the startup mentality. So if a coin starts up on the ground floor and it's cheap and easy access, everybody's going to get involved to start with. So before they even have a reputation, people are still going to get involved in it. So it's probably not going to stop. Excuse me. It's probably not going to stop a lot of that initial sort of first
I'm thinking,
week.
though, if Bob has launched an ICO and they're nicked off with money and then Bob launches another ICO over here, a lot of people are not going to know that it's the same douche who already ripped off people. So you could say, well, this guy is known to be dodgy, or he's had a coin that went for a couple of years and then the whole thing fell to bits and then he disappeared and now he's back again and things like that.
Oh, absolutely. But I don't think it's going to be as instantaneous as it needs to be to stop a lot of that initial transactions. You've only got to have something up for a day to get people's trust enough to start making real world money from it. So
and everyone has FOMO, so they want to be in as soon as possible that they hear the whiff of a new ICO.
Yeah, and that's my point. Like that's part of the problem is they're going to see a startup, they're going to jump on board, they're going to invest X amount of money in it, and then 2 days going to pass, and then there's going to be a post on ICO Hub saying, hey, this guy's a known fraudster, by which time, you know, he's obviously going to be watching the post as well. So as soon as that pops up, he's going to take your money. So it's a good idea. I think it's a great idea. And for established stuff and for newer stuff, I think it's fine. I just don't think it's going to work as instantly as it has to, unless the only way around this would be, and I don't know how you'd make this happen just due to the nature of a coin, but if you had some sort of application initiation process before a coin could be vetted. But then again, most exchanges require that anyway. Like, you need to put some form of currency, whether it's bitcoins or actual cash. You need to pay that before you list it on an exchange anyway. Like, look at
maybe we could look at it from the point of view, say, well, Will launched this coin and it's been doing really well, and now he's found a new area that he could launch a coin for, and we know that his last one did really well, so he's got a good reputation, so you could trust this one.
Well, yeah, exactly. And as is usually the case, that would spread faster, because also I would actively pursue that role and go on there and say, hey, I'm launching this coin, check out how well my last one did, I'm responsible for this one as well.
Yeah.
But so you're going to have that positive media straight up, but if you're a known scam, you're going to keep it as undercover as long as possible. I don't know, look, it's going to be interesting to see if it works in the real world, and that's why they're doing these trials on it, to see if it does.
Worth a shot.
For a legit or a real world actual brick and mortar business, it would definitely work, because most businesses are geared in such a way that for the first 6 months they're not designed, but they're basically guaranteed to lose money. Very rarely will an actual business launch and make money straight up. Yeah, you know. So usually when businesses plan to open a new store or like whether it's an existing store moving somewhere else, expanding, or whether it's a brand new business, they usually plan for 12 months of running in losses. So a company like ICO Hub, in that case, would be great because they can go, hey, this company's a new company. They've been trading for 3 months now. They seem to be doing all right. They're still around, blah, blah, so at all. But Bitcoin crypto stuff happens so much faster. Like, look at Straycoin. It went from, in a day, being mineable on CPU to not even mineable effectively at all. And that happened in a day of a coin that wasn't really even a thing. So, yeah, I don't know. I mean, maybe it's just the negativity of me coming out, but I can just see this not quite working the way they want it to.
Yeah.
And then, does that make them liable? Like, if their job is to protect people from scams and cons and bad investments, and they don't pick it up, is that going to come back and bite them in the bum? I mean, I know it's only reference. It's a point of reference, and that's all it is. But people tend to use that in decision making, and they could say, well, the fact that you said about them, I don't know. Don't know.
They'll have some lawyers.
No, they wouldn't have lawyers. They're going to go in this completely blind.
After a long-awaited and most anticipating thirst for the announcement of the mystery partnership which Verge XVG promised to unveil if its crowdfunding campaign was successful within the slated date, the altcoin went on its Twitter page to announce the world's biggest porn site has its partner, and the platform will be accepting cryptocurrency for payment. Pornhub has started accepting cryptocurrency as a payment option, the company announced. The site now accepts Verge cryptocurrency. Subsequent to the partnership with Pornhub, Verge also disclosed a collaboration with Canada-based Brazzers, as also a pornographic production company which was founded in 2004. The partnership with the porn duo companies brought more hopes to the crypto world that they will thrust the Ultra coin beyond imaginable thought. While the partnership was unveiled on April 17, Verge, according to Coin Ranking, was priced at 8.5 cents, and subsequently the altcoin dips down. On April 18, Verge was valued at 7 cents, while April 19 marked another fall when the altcoin was priced at less than 7 cents against the dollar. Lastly, at the press time, Verge sinks down to 0.067, so 6.7 cents, a steady and slow fall in price, even amid the crypto market comeback when all the cryptocurrencies seem to be bullish. Conclusively, it's now glaring that the collaboration, instead of pushing Verge into the limelight, seems it is deepening it into obscurity. Wow.
There's so many things I want to say now. But basically, well, we talked about this a couple of weeks ago. There was, what was it, Bunny Coin was another one. So they're not the first to do it. It's interesting to see.
First to do partnerships with these guys. So I don't know if other people were aware. Verge wasn't doing too well, and everybody was wondering if they needed to quickly sell because Verge was seeming to become scammy coin. And then Verge is like, oh, we got this totally, really, really cool, a big announcement to make, but you need to give us lots and lots of Verge coins back in donations, and then once we reach something like $1.2 million in Verge that you've purchased from us, give it back to us for free, then we'll give you this big announcement. Why they needed my money, well, not mine specifically because I don't have any Verge, but why they needed...
I thought you were going to say it's because you don't watch porn.
No, I don't even know what it is. And why they needed money from normal everyday folk to reinvest back into the company, give their Verge back, is it was like, wow, this is sounding really bad. They're like, okay, we got all the funding we wanted. We join up with Pornhub. It was like, cool. But What does that do for me now that I've given you my money? Oh well, we've got a partnership, okay, and also Brazzers, which is cool, I guess. But I've given you the money now, and now I don't have that money. And if it went up, that would have been good for you, but not for me because I don't have that money anymore. And so I'm not too happy about this. And now the price is down.
The other problem I have with this is, we're all aware the internet is effectively porn. Okay, that's no big secret.
The internet is for porn.
What I find strange about this is, how do I sort of make this? I form this in my head, but I can't figure out how to say it. So, generally, at least in reality, let's face it, if you're going to go to a porn website, you're going to use incognito browser because, well, you just are.
You mean a browser with porn mode?
Yeah, pretty much. Yeah. Basically anything that there is actually some dedicated porn browsers now that as soon as you close it, clears the cache.
Oh, anyway, really? You seem to be very experienced in this area.
Well, I literally just saw that. I'm looking up, trying to find how this amalgamation's working, but
porn browser.
But the problem I've got is, okay, using incognito window. All right, so I'm going to pay for this service. Wait, hang on. Now I've got to log into my wallet online, but I don't have my cookies set up on this browser. Okay, so I've got to now go to my normal browser that I access my online wallet in.
Transfer some money.
But now I can't get that from there to this browser. So I've now got to open Pornhub in my main browser so that I can log in, so that I can use my wallet to transfer. Yeah, no, look, I see several issues with this, that not being least of them. But the other thing I don't understand is who pays for porn?
Right.
Like, in reality, almost every guy, I can guarantee, at some point has searched porn. Even if you've typed things in wrong into Google, it still comes up. So everybody is aware that it's free. And yes, there are paid services, mostly webcam and stuff like that, and private shows. Okay, maybe the private shows, I can kind of see it being used there.
Yeah.
But you've got the same problem. You've got to do it on your primary browser, not your secondary browser, because of the way our browsing habits work. It's a really strange thing. I get that there's...
Probably that's why other people didn't get it and Verge went... Ba-bow,
yeah, look, why not pick Kmart or something, like something that's at least usable, because now you're not only limiting yourself to people who watch porn, you're now limiting yourself to people who have a cryptocurrency in that specific currency and watch porn and are in a position to combine the two.
Yep.
So your market really is very niche. Well, they just assume that everybody who holds crypto is going to pay for porn?
I guess.
That's actually quite hilarious now that I think about it. Talk about, major cock-ups.
Yeah, to me it just sounds like a sticky situation.
It's just going to get deeper and deeper.
Exactly.
They'll get wet feet if they're not careful. But no, it's odd. I don't get it. I don't understand it. Obviously, neither does the market because their price has tanked. Their price continues to tank. And Gooey, ironically, in the chat says that, as we know, porn is worth... It's the most... Well, it's worth more than anything, realistically. Porn is the driving feature or driving industry behind so many things, behind DVDs, behind a lot of stuff we use, is actually initiated by the porn industry. And we know they're worth so much money. But the thing is, when you make it such a niche, accessible market, it no longer becomes that. It becomes that thing that it's really ironic. The porn industry is so huge, and yet people don't talk about it because everybody's, hey, nobody does that. No one goes there. It's not even taboo. It's gone beyond taboo now. It's gone to the point where it's actually like you feel bad talking about it. But everybody knows that's what the internet was. Okay, it was founded for two things. It was founded for military use, and it was founded for porn. That's all it was designed for. Yeah. But when you make it such a small, minute... I mean, how many people hold Verge? And then how many people...
Not as many as before, because they gave it all back to Verge so that
exactly.
they could have a big announcement, which turned out to be porn.
That's it. Not only you've only got such a small percentage in the first place who have Verge coin, and then of that percentage, X amount percent are going to watch paid porn, and then of that percentage, only a certain amount are going to use their Verge coin to watch paid porn. So you really, you market, it ain't much there. It's a really narrow strip of people.
Yep. And I can see, having a look on coinmarketcap.com/currency/Verge, still going down. Dropped another 3.15%.
If it goes down to... So what's it down to now, actual dollar value?
In Australian dollars, 8.8 cents.
If it gets down to like 5 cents, I might buy some just for the hell of it. I'm just curious to know, like, if that would... I'm going to do a sort of a medium tank investment. I'm going to wait till it tanks about where I think it's going to level and see how close I am. I'll buy... I don't know, 100 coins or something and see what happens.
6.7358 US dollars.
Yeah, well, when we did this story, it was 7.24, so, yeah. Alrighty. You, sir, are going to make Glenn happy anyway. And if you just don't know what we're talking about, if you've watched any of our other shows like Aussie Tech Heads or part of that network, that's Glenn's baby. So by we, I mean Jason.
he listened to
Even though we put a disclaimer saying we don't know what we're talking about, don't listen to us, he went against our advice and bought a coin that we recommended. Wait, what?
You're a silly boy. Coin of the week, we're not recommending purchasing it. Right?
Ever.
Glenn. Not speaking to anyone in particular. Glenn. Just explaining what it is and what it can be used for. I believe it has good real-world use. Today,
what else it can be used for, not including purchasing it?
Porn? Wait, no, not this one.
Yeah, the wrong coin.
This one is Ripple, also known as XRP. The goal of Ripple is to be a global settlement network, a platform to allow anyone to transfer money in any currency to any currency in a matter of seconds. This is an ambitious goal meant to eliminate the use of older systems like Western Union or SWIFT. SWIFT is the world's traditional international transaction system. It was created in 1974, and at its heart, it is just a messaging platform. Where am I? That banks use to ask each other to send money to different places, and payments get bounced between banks along the SWIFT network, each of which will take a cut of the money as part of its fee. It was invented decades ago, and despite maintaining many institutional applications, has an impressive range of downsides and deal-breaking limitations by modern standards. The clearest is that it's extremely expensive for individuals. The customer needs to pay the fees for each bank that messages each other along the way. Many of those banks don't actually need to be involved, but are anyway. These costs make it impossible to send small payments through the SWIFT network, and almost impossible to accurately predict how much money will actually arrive at the final destination. It's compounded by costs involved in currency exchange, which also come out of the customer's pocket. Transactions typically use the US dollar as the intermediary simply because it's convenient for the banks, even if the transaction itself doesn't involve the US dollar. For example, someone who wants to send money from Australia to Europe, converting it to euro along the way, will see their money bounce from AUD to US dollars to euro. they'll typically be paying a percentage of the total for each conversion. In a recent interview, Ripple's global head of strategic accounts, Marcus Treacher, said outright that a Ripple-Swift partnership will almost certainly not be happening. Firstly, he said the two groups are currently focused on relatively different markets and transaction types. Secondly, the advent of distributed ledger technology, or DLT, coupled with Swift's relative lack of innovation, is likely to see Swift's demise in the relatively near future.
Mm-hmm.
The Ripple and Swift are so different that we would not need to partner, Treacher said. Swift's system is not designed to process high volume, low value payments. We recognise that our model could eventually lead to Swift's demise that is equally equipped to handle large as well as low-value transactions, but we are happy to coexist with the Swift world. A decade ago, Swift's position as the heart of the global financial network may have seemed unassailable, but now it's looking much more fragile. It's a lesson that many of yesterday's disruptors are taking to heart, and Google and others are paying a lot of attention to the potential of next-generation DLT systems, lest they get unseated too. Swift recently completed its own DLT proof of concept, which could help solve many of the system's lingering disadvantages, but also has a problem pushing its clients onto compatible systems at a considerable expense to someone. Now, I know this firsthand. Sorry, to butt in.
No, you're right.
But I was with a bank in Australia, and I got this job that I've got now for a company based in San Francisco. So they're like, okay, we'll transfer your pay through Swift because that's the way to do it. And we'll also reimburse you for certain things through the month using Swift as well. And as Mr. T reaches into my chest...
Sorry, I was...
Yeah, look on the video, you stick your hand into my stomach.
Sorry, I was turning the fan on.
It cuts off right under my arm. The bank said, oh yeah, every time that you receive your pay, we're going to take $10 to $20 of it. And I'm like...
Because it costs them
really?
That much.
Why is that? And they're like, well, we're just going to. And I said, well, okay, that's not good for me because I might get 3 or 4 transactions in a month and you're going to take $10 to $20 out of each of those? Yeah. Okay, so the transaction might be for like $100. So you're taking a tenth of my money for no reason. Yeah, that sounds good to us. We're going to get your money. And so Will here, Mr. Smarty Pants Will, said, why don't you go with my bank? So I ring up his bank and they're like, I said, what are you going to charge for Swift transfers? They're like, no, why would we do that? That sounds like a terrible idea. It's your money and it's going into your account. We're not going to charge you to receive money. I was like, okay, old bank, goodbye. Moving over to new bank, hello. And new bank got my home loan mortgage now that I'm paying off. So that ended up being a lot more money for them that the old bank could have got, but now they just shot themselves in the foot because they want to steal money from me.
Yeah, and that's exactly the way they work. They know that by offering perks like that at the end of the day you're going to bring everything over, you know. But I mean, your old bank isn't alone. Most banks are like that. Most banks will go out of their way to fine you for using them. Whether it's dishonor fee. Have you ever had a dishonor fee with ING? Won't happen.
No, I haven't had it with any bank.
Oh, okay. But it won't happen with ING. What they do, if something like I cocked up and transferred our home loan payments into the wrong account, so there was no money in the home loan account, and they won't take the money out. So they actually processed the payment, took out the money, then sent me an email saying, hey, when you get a chance, can you just throw some money back into there? Like, none of this, we're not going to process it and charge you $45 for the trouble.
Like some of the American ones that'll charge you for your something will happen, they'll charge you a fee for it, then you go into negative money, so they'll charge you a fee for having negative money that was caused by the charge that they put on you.
Yeah.
And it was their own fault.
A lot of Australian banks are doing that.
Then they'll credit your pay that goes in on the same day after you've got all these charges done, and then they'll credit you back, but you've already had the charges, even though they could have processed the pay first, and then none of these negatives would have happened.
Well, it's even more than that. I was reading an article from a bank employer, or actually Bank of America, it was their job to look at somebody who was borderline able to pay their bills, and not only was it their job to process the payments before they put the money into the account, they actually itemized the payments first so that the largest sums came out to clear the account out. And that way all the small little accessory amounts each got charged the $50 dishonor fee, and they might have only been a $10 check, but because they cleared the account out first with the big payments, then left them with 30 little payments, they got charged all these dishonor fees, which when they put the pay back in, still wouldn't clear it, so they were still in the negative even after they'd been paid. That was actually their job, to do it that way.
And the bank's like, we can process it however way we want.
Yeah. You can, but you shouldn't. But that's the thing.
Is there any wonder why this Banking Royal Commission in Australia is digging up so much dirt out of the swamp?
That's not exactly hard.
They're only just brushing the surface, because the government's like, well, you can't just do everyone and all of the things. We'll just let you do this little bit over here. So like, okay, we'll look into that little bit. Oh my God, this little bit is gigantic. I can't imagine if you had to let us just dig as far as we wanted. All of the banks would just be shut down.
But what I find... Did you just say, okay, Google?
No, they flip every now and then. I don't.
Yeah, and that's the thing. Like, I don't understand, for one, why people put up with it. Like, if your bank's playing those games, change banks. Because there are banks out there that don't
Wells
do it.
Fargo. I was just reading today, they've been charged a record $1 billion for all of the dodgy practices they're doing, and now they're having to pay back all of the customers they ripped off, such as, we'll make sure that you get your sales bonus if you can get enough customers to open new accounts. Okay, I'll go into the customer's accounts and open new ones without telling the customer, and then customers will ring up and go, oh, hey, I logged onto my internet banking and there's this new account. They're like, oh, yeah, congratulations, we gave you a new account because you're such a good customer, right? And then they get fees on that account and things like this, and then they were selling them auto insurance that they didn't need, which meant that they suddenly couldn't afford to pay the auto insurance and for the car loan, so the car got repossessed. And then now they're having to pay $1 billion plus pay all of those things back, and it's a big mess. They've been getting away with it for so long.
Yeah, I bet you the CEO still walks out with a golden handshake.
Yeah, doesn't matter what happens with him.
No.
But it's created by the managers at the top saying, if you don't do this, you'll lose your job. So they're like, crap, we better do anything we can. I don't want to lose my job. And then those people who didn't want to lose their job but only did it because management said so, well, we'll get rid of them. They're obviously terrible people. I mean, how could you do all of these extra accounts that people didn't ask for? I mean, what is wrong with you? You're terrible staff. We need to fire you. Us managers will keep our position. We're the ones who coerced you into doing those things, but we didn't directly say, hey, why don't you go and open up an extra 100,000 accounts on random people's accounts? We just said, well, you lose your job if you don't do something.
But part of the problem is, and this is true, and like, we're miles off topic now, but who cares? Part of the problem is that...
At the end of the show, we can do what we want.
We've been off topic. That's it. Like it or get out. No, leave a like, then get out. But yeah, it's a whole mentality, and it's not just... It's infuriating how widespread this problem is. It's much deeper than just that, and this goes whether it's banks, whether it's laws, whether it's whatever. The only reason that they can enforce taxes, laws, regulations, regimes, the only reason these can be enforced is because almost everybody does it. If everybody woke up tomorrow and said, no, we're not paying income tax, we're not paying rates, we're not paying you that, that's just not going to happen. We own the land, we're not renting it off you. If everybody in the country did that, then they're going to shit themselves because they have no leg to stand on. If everybody is in agreement that what they're doing is wrong and chooses to not do it, they have no power. But because that 1% says, well, you actually can't do this, and if you're like, well, if you don't shut up, we're going to make your life miserable. You know, and that's what it comes down to. It's effectively bullying tactics, but it's from every position in society. And it only works because everybody says yes sir, no sir, three blind mice sir. That's the only reason it works. If people didn't say that, it wouldn't work. If people said, like, if all these bank staff, the entire bank went, no, we're not doing that. You need to fire all of us, or you need to deal with it. They're not going to fire every staff member. It's physically not, it's not possible to do without being investigated to start with. It'd raise a hell of a lot of red flags. And you wouldn't have a business if you did that. But because it, for some reason, feels like it's a personal burden and it's only going to affect you, everybody agrees to do it. And that's a lot of the issues that's with corporations and businesses in general these days. Everybody's so scared that they're going to lose their job, but there's plenty more jobs, and they're not going to fire everybody if everybody has the same answer.
Yeah. But you see one of the banks, it was like NAB or something, and they said, well, we know, we understand now the Royal Commissioner said there's some bad things that we did, we shouldn't have done it. But the problem is all the other banks are doing the same thing, and unless everybody stops at once, if we start doing the right thing, then we're going to be in a significant disadvantage because they're still doing all the wrong things that you don't want us to do. So if you just stop us, then our bank's going to tank and all the other ones are going to win, and we'll have to shut down or something because everybody's doing the bad thing.
But that's not true because ING goes out of their way to do that. And I don't just
we're always talking about the big four.
But the reason they don't mention ING is because then they give the public acknowledgement that they're doing a better job. You know, and they're realistically, ING is scaring them off because of that reason. They actually give you a rebate if you use your, like, FPOS, not FPOS, ATM, which should not have a charge on it anyway, but you've paid your $2.50 ATM fee, which I thought was always supposed to be capped at $1. But anyway, you pay your $2.50 ATM fee, and ING go, you've used an ATM, here you go, have your $2.50 back because it's not fair that you have to pay that. Right. You know, and they just do things.
I think that's because of that, which is why banks like Commonwealth Bank ATMs and stuff, now you put your card in, they're like, this terminal won't charge you those fees for anyone anymore. Like,
Yeah, only if you
I wonder if
ING
and things like that never existed if you would be doing that, or you're just now so sad that people are leaving for a better bank that you're like, well, we better not charge for it anymore.
But as you said, they don't charge for international transactions. They don't charge dishonor fees, which actually, technically, that was outlawed a few years ago. No bank can charge a dishonor fee without processing the payment. So if you've been hit the $45 dishonor fee and they haven't processed the payment, to start with, they shouldn't have done it, but they're going to do it. You can then walk into the bank and say, hey, you know you can't legally do that. And they go, yeah, we know, here, have your $45 back. But unless you
bring it up,
unless you address the situation, they won't mention it. But as soon as you mention it, they'll fix it.
Oh yeah, we were doing that illegal thing. Oopsie, we didn't really mean to. You understand, don't you?
It's just stupid. But this is why banks are scared of crypto at the end of the day, because it takes all that power out of their hands. PayPal took a long time to get banks on board because banks didn't want to have the ability for an independent organisation to be able to access people's funds. But SWIFT is well, Swift's the opposite of that. Swift is like every bad bank put together. But
Well, I read an article when I was researching for this, and they were saying about Swift. There was a country that some of the Western world countries wanted to put some pressure on, so they said, "Oh, okay, we're just going to ban you from using Swift. Now you can't transfer money in or out of your country. All your businesses are going to lose out. They're not going to be able to do trading. Your customers are not going to be able to buy things from overseas or have things bought from them by overseas people, and your country's going to be screwed." And it was like that for about 10 years, and then eventually they're like, okay, well, we'll just do whatever you say so we can have Swift back, please.
yeah,
That's how powerful Swift is.
Yeah, that's right. But it's only, and I don't understand why. Because there's other options. There's always been direct deposit. There's been even things like what's that other one? I got a complete blank. I thought of it a second. There's something Union. Western Union. Yeah, no, that's instant money transfer. I mean, it's no different. It's got its fees too. But I'm really surprised. Actually, somebody wanted me to do something with Swift the other day. I'm like, they're still around? I didn't realise that they even still existed. I didn't think that they would still be relevant. I thought there'd be so many options now that Swift would go away. But apparently,
if this ID, your account ID that they've brought out now in a lot of bank instant transfers is going to put pressure on Swift as well.
Well, yeah, I mean, they say instant transfers. The funny thing about that, it's not instant. It still is bank dependent because it still works on local legislation. And local legislation states that they can hold the money for up to 5 days before releasing it. So the only thing it guarantees is the money leaves my account straight away. Which, if I'm with ING, it does anyway. But when you transfer, especially the first term, if you've done it to an account more than once, it's tended to get quicker. If you're going in the same bank, it's quicker. It's actually usually instantaneous. But I've tried it a couple of times just for testing, and yeah, it leaves my account straight away, but it sits do it on in the other account from anywhere from 1 to 5 business days. So if you do it on a Wednesday, it could potentially be the following Wednesday before they get the money. So it's actually exactly the same as a standard bank-to-bank transfer, except it's easier because you don't need the whole BSB and account number thing.
Just give your email address.
Yeah, well, I mean, I use PayPal for this sort of thing because it is instant. It doesn't matter if the bank holds the money because PayPal has pre-cleared it. And then once PayPal verify it, they give you the transaction fees, even if they haven't received the money yet. So PayPal is, okay, you pay 8% or 6% or whatever it is, but at least you get the money straight away. And if you pay something else with PayPal, you pay less fees. It's only really gets expensive if you try to pull the money out. So I don't know. I don't really understand. I get what Ripple's doing, but I don't understand what Ripple and Swift. They're not compatible. They're really not. So maybe if they actually do take them over rather than partnering with them, that could be a good thing because it may make them relevant again.
Or just make Swift obsolete and everything's Ripple now.
Which, once again, we go back to the whole, okay, so how do I get money from that? You know what I mean?
Well, it's using the Ripple system to transfer it, but it doesn't have to convert it into XRP style coin first and transfer it. It could just stay in Australian dollars, get converted straight to US on the way through.
I guess if they use the Swift system. But does that mean that their transfer fees stay in place? In which case, well, what's the point?
No, this is going to be Ripple, which is going to be able to do micro fees and smaller transactions, like you want to send somebody $5 overseas or whatever, you can do that. Whereas if you try to do it with Swift, you might go, I want to send $5 overseas. Well, there's a $30 fee for that.
Yeah. Well, that was like another podcast I helped manage. We set up a Patreon account for that. So Patreon use Stripe as their payment throughput. So Patreon take 5% or whatever it is, and then on top of that, Stripe take their processing fees. So to give you an idea, on over the last month, they've had basically best part of $1,000 in donations, and of that they've received 650.
Right.
So best part of $350 has gone between Patreon and Stripe and the bank fees on top of that. So I don't know, they've probably got $600 out of the 1,000. So they're getting 60%, and two electronic organisations that don't physically do anything, between them are getting 40%.
It's a bit ridiculous.
It's just stupid. So hopefully this will solve that.
Disruption.
Yeah, I mean, there's definitely going to be a shake-up. We've said it before. Once it gets to the point where your average mum and dad have access to crypto, it will change the way people do things. It will become almost like you're trading a service rather than trading money. The whole thing of paying fees and paying interest and paying tax on those fees and whatever, it'll go away, because if you want to charge 300 coins, whatever that coin is, for something, someone just transfers you that 300 coins, and there's no interaction with an outside source. Yeah. So it will be, there'll be basically no fees. So it will, and by not having fees, it means products will be cheaper, because you're not paying fees on that. Well, the person who's selling that product isn't paying the fees on that product. So that product will actually get cheaper in value, which means they're going to sell more, which means potentially they can buy it in bulk, make that product cheaper again, so they're going to sell more. So it actually has that carry-on effect to boost the economy by paying less for something.
Yeah.
So, yeah. Anyway, I'm going to shut up now.
Don't forget to visit our website at aussietechcrypto.com. Send us an email from the Contact Us form on there. I've managed to stop the spamming, I think. Or jump onto Discord to talk to us. Thanks for watching. Don't forget to like, tell all your friends about us. So leave a comment. Like we've had a couple of people leave comments saying, "Where's the show?" Well, here's the show. And hopefully there'll be another one next week. So we'll see you next time. Bye.
Don't forget, pay us in Australia coin.
Yep, all around there.
See ya.
This show is a part of the Aussie Tech Heads podcasting network. You can listen to us at aussietechradio.com. We're not licensed advisors, so please don't invest your life savings in anything we say on the show. You can contact us at feedback@aussietechcrypto.com. Visit the website aussietechcrypto.com. Thanks for listening to Aussie Tech Crypto. Tune in each week for more fun and information.